start. Mr. Ramesh, is it okay?
I'm fine. You're able to hear me and see me clearly?
Yes, yes. And all the panelists.
I lost you, Rishi, for a moment.
Lost you. Anyhow, good evening, everyone. This is Vivek Agarwal, President ACA, welcoming you all for this session, which is about CFO, who plays the role of the backbone of any company, and it acts as a bridge between the operation and finance. And as a president of ACA, I welcome all the panelists and a moderator for the day. And let's move forward to today's session. Prior to that, I would like to just play the ACA motto song.
असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्योर्मा मृतं गमय ॐ शान्ति 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 असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्योर्मा मृतं गमय ॐ शान्ति शान्ति शान्ति.
Thank you, everyone. And friends, I, Vivek Agarwal, as the president of ACA, welcome you all. And today we have joined together for this CFO conclave. And when we talk about ACA, we take privilege in introducing ACA as a body of corporate professionals. It was formed in 1960 and celebrated its 60th year in 2020 in the presence of late Pranav Mukherjee as chief guest. It is a body of chartered accountants, company secretary, and various business tycoons from East India. Today, corporate and professional world is facing immense challenge in a fast-changing legal, technical, and global business environment. And ACA acts as a catalyst to help everyone around. We also present our annual ET Bengal Corporate Awards for last few years under the leadership of PR Ramesh sir, an event attended by dignitaries like Sri Piyush Goyal, Sri Sachin Pilot, Sri TV Mohandas Pai, Sri R.S. Agarwal, Sri Amit Mishra, Sri Kishore Priyani, and various dignitaries from business world. Without further ado, I request Rishiji introduce the theme in brief and take this forward. Over to Rishiji.
Thank you, President Vivek. Very happy evening to all of you. Respected moderator, CA PR Ramesh, CA Shubhra Gorseria, panelist, CA Nitin Parikh, panelist, CA Sandeep Batra, panelist, and CS Rameshji Subramania, my dear friend, panelists, and all my friends who are eagerly waiting to listen to the panel discussions. Friends, around more than a month back, while Mr. P.R. Ramesh was in Kolkata, he was kind enough to give us audience, Vivek and myself, over a cup of coffee. And this virtual CFO conclave is a brainchild of our president, C.A. Vivek Agarwal. And when he shared this with Rameshji, P.R. Rameshji, and prompt came the response, why virtual, why not physical? Then CA Vivek said that, well, sir, we want to have CFO of the best corporate of India, and it will be very difficult for all of them to meet and come in to Kolkata to have this conclave. So here we are with a virtual CFO conclave. The main architect of this entire CFO conclave is our moderator, CAPR Rameshji, who is going to extract value addition from our respected panelists for the delegates. And so today's theme is lessons for better tomorrow. and members of the profession, whether it is CA, CS, or cost, who are in industry, look upon our respected panelists as well as moderator as role model. Members in practice, look upon yourselves as for guidance. And today we will be having lessons from all of you, lessons for how to effect better qualitative deliverables, lessons for embracing changes in career and in operations, lessons for bringing value addition, lessons for matching expectation of different stakeholders like shareholders, regulators, investors, directors, and auditors, lessons for becoming successful in career, which all of you are, and lessons for better tomorrow. Now, before I conclude this brief introduction of the theme, I am reminded of late S.P. Balasubramaniam, a renowned artist and a singer, who once said that to be a good artist, a good singer, you need to be a good human being. I also feel that to be a good professional, you need to be a good human being, which I firmly believe all of you panelists and the moderator are. So with these, I give it back to CA Vivek for taking it onward, this discussion.
Thank you, Rishiji. Now I request uh, 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 Financial Literacy Committee Co-Chairman Swatiji to introduce the panelists. Swatiji.
Hello everyone, good afternoon. It's a pleasure to be here today. I would like to introduce and welcome Mr. Ramesh Subramaniam sir. Mr. Ramesh Subramaniam sir is a BCom from Nagpur University, AICWA, ACS, CPA, GMP in CDEP, Paris, and AMP and IIM Ahmedabad. He spent over 30 years in financial and treasury, corporate strategy, business management, mergers and acquisitions, and commercial areas of corporates across industries in leading multinational companies. Until recently, as CFO and President, Fuel, Land and Logistics of Tata Power, he was member of boards of large companies, ex-chairman, National Committee of CFO, CII, and member CII Economic Affairs Committee. He also mentors assessment teams in the Tata Group Business Excellence Management Program, apart from being a speaker and panelist at various conferences in financing power sector, both in India and overseas. He's also a keen wildlife enthusiast, and currently he is the Senior Vice President at Group Chairman's Office, Tata Sons. Welcome, sir. We are very, very glad to have you here.
Thank you, Sadi.
I would like to introduce and welcome Ms. Subra Gaurasarya. Ms. Subra is a proud chartered accountant and has 18 years of post-qualification experience across different aspects of business, starting with oil and gas industry, wherein she was responsible for entire gamut of finance operations of multiple joint venture operations at different stages of growth and with different ownership interests. Thereafter, she spent next 14 years with FMCG, Hindustan Unilever Limited, with 6 diverse roles spanning across business partnership, internal audit, competition intelligence, and strategy. In the most recent job, she is the CFO of Rallis India Limited. To sum up, 18 years, 3 different industries, and 8 different roles with diverse stakeholders helped in Subra in becoming the CFO of an NSE-listed company at the age of 40. Ms. Subra had been a high performer and had cleared chartered accountancy with All India 11th rank in 2003, with highest marks in management information system. She is very relentless in her pursuit and has several awards in her sleeves. She has also won the ICA Professional of the Year award. She also invests in keeping herself updated with latest developments in the field of accountancy, controls, and had won the Unilever Accounting Olympiad, an intense contest of controls in accounting across Unilever countries across the world. On personal level, Ms. Subra comes from a traditional Rajasthani family, which prioritized education despite resistance from extended family, Last 18 years has seen her transform from a timid, soft-spoken nerd to a finance leader of a reputed organization. Ma'am, we are very glad to have you here.
Thank you, Swati.
Thank you, ma'am. Vivek.
To Swati ji, over to Sumit ji for brief introduction of the other two panelists. Secretary Sumit ji.
Yeah, thank you. Thank you, Vivek. I have a very pleasant task of introducing the two more panelists, that is Mr. Sandeep Batra. Mr. Batra is a qualified chartered accountant and a company secretary. He joined ICI straight after qualifying as a chartered accountant in 1988. He has worked with ICI for 21 years in various business and corporate roles, including running a few businesses of ICI. In 2009, he moved to Pidilite Industries as their CFO, with responsibility for finance, legal, and secretarial function for all the group companies in India and overseas. In September 2015, he joined Crompton Greaves Consumer Electricals Limited as their CFO. He's an alumni of South Point School and St. Xavier's College in Kolkata and has got deep roots in Kolkata, the city of joy. His pastimes include reading, music, and golf. We welcome you, Mr. Batra, to this conclave. Thank you very much for being here.
Thank you so much.
Next is Mr. Nitin Parikh. Mr. Parikh is a holder of 6 qualifications. He has got brilliant academic track record, has won gold medals in several examinations, including the CA, CFA, and MBA. He's also from IIM Ahmedabad. Mr. Parikh is serving Group CFO in Zydus Life Sciences Limited, earlier named Cadila Healthcare Limited, Ahmedabad, which has consolidated annual turnover of more than 15,000 crores. He possesses 36 years of post-qualification experience in finance, legal, and IT functions. He has handled more than 15 M&A deals, including the acquisition of Heinz India Private Limited in January 2009. Mr. Parikh is a recipient of more than 20 awards in the decade. Some of the awards include Excellence in Mergers and Acquisitions by CII in December 2021, India's Best CFO Large Enterprise by Business World in August 2021, Outstanding Manager of the Year Award from Ahmedabad Management Association in March 2021, League of Excellence 2020 Award from CFO India, and the Best CFO in Healthcare Sector for 2012, and also for 2017 by the Institute of Chartered Accountants of India. He has also served on the Board of Governors of the Institute of Chartered Financial Analysts of India, the ICFI Business School, the ICFI University, and on Accountancy Board of Gujarat University. He is presently on the advisory board of Adani India Institute of Infrastructure Management. He is also on the board of many Zydus Group of companies, appointed as Chairman of Finance and Banking Committee of Gujarat Chamber of Commerce and Industry. He has also penned a number of articles, and he's a regular speaker at several forums, including the forums of Business World, Big Four firms, CFO India, IIM Ahmedabad, and the list is endless. Thank you, Mr. Parikh. I'm sure that with the deliberations with you there, I'm sure that the audience are really going to enjoy this session. We welcome you once again on behalf of ACA.
Thank you.
Thank you, Sumit ji. Over to Rishi Khatur ji.
Thank you, Vivek. I have the honor of introducing our moderator, CAPR Ramesh ji, who was the chairman of Deloitte India and has 40 years of experience in the profession. He has been associated in very senior responsibility positions with various regulators like SEBI, RBI, IRDAI, and Acae, which is National Advisory Committee for Accounting Standards. With various industry bodies like CII, currently he is in the Committee on Corporate Governance. With FICCI, he has earlier served as a National Executive Committee member. As a past president of Bombay Chamber of Commerce and Industry, which is the oldest chamber of commerce in India. In professional institutes, he has served in senior position in ICAI as well as in ICSI. He has co-authored the book, which is published by CCH on IGAP. He is empaneled expert on IFRS with IMF, International Monetary Fund, and in our heart, above all, he has been the past president of ACA in 1992-93. Welcome, CAPR Ramesh ji. You are the main architect of this entire session. Thank you for accepting this role as a moderator. Thank you very much.
Thank you, Rishi ji. Over to our moderator, and let's the session begin. Yeah, Ramesh sir.
Thank you, and good evening, everybody. And first of all, thank you for the kind words. I know you've all described me as an architect. You see, the problem with an architect is an architect only designs. To translate the design into reality, you require other people. So that is where I am really fortunate to have a very, very eminent panel here. If not often is a moderator in a position where he is dazzled by the brilliance of the panel, the experience which they bring forth. Take Ramesh Subramaniam. I don't know whether his name is longer or the qualifications are longer. The vast experience of Nitin Parekh. I think I heard the biodata describing him, his achievements. Subra, of course, again comes with very, very impressive credentials. And Sandeep, I know him very well. I can not only speak of his credentials, but I can speak of his competence in a big way. I'm really very fortunate to moderate. On the contrary, I am looking forward to a lot to hearing from moderator. I don't think I have to extract value from them. They will pour out value, as you will see. Rishi, unlike what you said, I only need to just unlock the floodgates of the brilliance which you will see coming forth from them. I have a set of questions. I will also ask them to give their opening remarks. But before that, I thought, let me set the context. In the last 4 decades plus, since I've been involved in the accounting profession, I've seen this transformation of the role of a CFO. Years ago, in the 60s, in the 70s, a CFO had very little, shall I say, innovative to do. Interest rates were fixed, foreign currency rates, exchange rates were fixed. There was nothing which needed to be done. It was a fairly laid-back Indian economy. There was not a situation, there was not the situation we have today where the world is volatile, uncertain, and connected, and of course ambiguous in a big way. We are still living with too many uncertainties, and I'm not sure when these uncertainties will go away or whether that uncertainty is a new normal which one has to gear up with. We are in the midst of an industrial revolution, as the word now is Industrial Revolution 4.0, where there is a conflict with the physical world, the digital world, and the biological world. We've moved away not just from an information age. We started off with mechanical production, mass production. The first and second and third industrial revolutions were nothing compared to what we're seeing today as the fourth industrial revolution. It's not just the explosion of information, but the congruence, as I said, of the physical, the digital, biological world. And we are seeing huge disruption across industries, which is posing a challenge for everybody, including, of course, the CFOs. Additionally, even investors' demands are different. They seek they're seeking integrated reporting. We are in the XBRL age, which is transforming financial reporting and the way it is, and non-GAAP measures being included, and the key performance indicators significantly changing, where the shift is from confirmatory value to predictive value. One is seeking that from financial statements, and I know CFOs will have a lot to say on this. And in the digitization or in the technology world, there are some very, very interesting trends which we are seeing. Take a simple thing like electric cars. We are saying, okay, we are thinking that it's just a normal thing. Look at the disruption it will cause to auto repair shops. Auto repair shops will go away because it takes just 10 minutes to remove and replace the electric motor, which is the heart of the electric car. And electric cars come with lifetime guarantees. They're repaired by dealers. So look at the gas stations will go away. Electricity will become incredibly cheap and clean. Cities will be less noisier and cleaner, hopefully, the way lives are changing. And there are predictions that in a few years, in the next 5 to 10 years time, what happened to Kodak will happen to a large number of companies. There are companies now, we have in this panel person from the pharmaceutical world. There are companies who build a medical device called the tricorder, which, if you've seen the Star Trek movie, you would have seen that. That works with your phone, which takes your retina scan, your blood sample, and your breath into it. It then analyzes 54 biomarkers that will nearly identify every disease. What does it mean for doctors? What does it mean for pathologists? So there are dozens of phone apps like this which are out there. And then a study which was done a few years ago in terms of future of employment, which says the accountants and auditors are the second largest group of people who are vulnerable to jobs due to computerization. The largest, of course, will be telemarketers. And then we have the 5 I's, which I may say impacting businesses. First is information. The overload of information is so much that we are inundated with information. But that information by itself is data, is useless, unless businesses are impacted by the second I, which is interpretation of the information. And then merely interpreting is not enough. You need to integrate or interface that with the rest of the businesses and work on the interrelationships. And of course, the intensity of all what we are seeing is significant. What we are seeing is not just change, we're seeing exponential change. And exponential change is not ordinary level of change. Additionally, there is impact of digitization on the finance function. Accounting increasingly will be intelligent. We talk of AI, we talk of artificial intelligence, we talk of artificial general intelligence, we talk of artificial super intelligence. But all of this, including predictive analytics and algorithms, will get embedded into finance. You can imagine what it means to CFOs. Reporting will increasingly have to be interactive. No longer can it be static data on paper. Finance executives will use tablets and phones to navigate information. Reporting tools themselves will become interactive. And analysis will be real time. Why wait for end of quarter, end of the year? Who cares for end of the year reporting? I've always said this, an annual report is useless, it is junk. It is historical in nature. It has maybe some sort of accountability value, but very little predictive value. No longer will postmortem be important. Data will get analyzed as transactions happen. And that will impact the role of a CFO. And that's why I would like to hear from CFOs as to how they are planning to work on this, as evolution then becomes a revolution as a result of this, whether it's the digital world, whether it's the stress on KPIs. And we are also seeing activist regulators, we're seeing activist media, activist boards, and increasingly one is looking to the second most important person in the organization, which is the CFO. It could be debated as to whether he's second most important or the most important. He also has to provide a leadership role. So CFOs have to shift their roles from, providing hindsight to perhaps more insights leading to foresight, which is what the new world will require. So their role is not just of operations or not just strategy, not just controls, but leadership in a big way is what the new age CFO will be. And there are a number of things which are disrupting the role of a CFO. I've spoken about a number of them, and it is clearly beyond the balance sheet. And CFO, themselves have to gear up for the challenges in which it is. Because as a lot of what the CFO does, there's a lot of blurring will happen in terms of what exactly is the role of the CFO. In the past, it was easy to identify a role of a CFO, but increasingly you will find that what a CFO does, or what a managing director does, or what many others in the business do, is almost, there are significant overlaps which will happen. And there are governance requirements which, as far as CFO has to face, the regulatory requirements the CFO has to face. I talked of activist regulators. We are seeing one in India itself, a new regulator. Some people have had challenges with this regulator. All in all, I can say with these opening remarks that as the Oneida advertisement said at one point, neighbors envy, owners pride. I'm not sure I would, envy the role of a CFO. It is extremely challenging. So kudos to the CFOs. And I think what they do, they may still be smiling, but what they go through, and they are the ones who shape the organization. They are the face of the organization to the outer world. They also are the face of the organization to the inner world. When frauds happen, when things go wrong, they are the ones whose neck is on the block. When organizations collapse, they are the ones whose neck is on the block. People ask questions, not just of auditors, but also of obviously the CFO. Because finally, they are the ones dealing with numbers. They are the ones also trying to make things happen while at the same time doing financial reporting. How many such roles are there where people can actually make things happen while at the same time reporting what has happened? It is kudos to you once again, and welcome panelists. So let me begin by requesting each one of you to describe your journey as a CFO, challenges which you faced, the lessons you learned, and how you added value to the organizations you are in. I think, let me start with Subra. As they say, ladies come first. And Subra, I think floor is yours. We would like to hear from. I have a set of other questions, maybe a dozen questions, and each one of you can answer, and each one of you are capable of answering. So you all can answer a single question. You can even pick and choose the questions. I'll leave it to you, but first I'd like to hear from you all, your own journey, and any feedback even on what I have said so far. Thank you very much. Subra.
Thank you, Ramesh. So Ramesh, I started my career as a CFO 1 year back. So I started with Rallis India Limited. Before that, I was the divisional CFO within Unilever. And as you rightly described, the role of CFO is a so-called bed of not roses, but it also has thorns attached to it. So there are various challenges which come on the day, and each of these challenges actually give you a lot of experiences and learnings. To this forum, I'll probably talk about 1 or 2 challenges that personally I have seen. For instance, in my last role, where I was handling the home care finance head, I was a divisional CFO of home care business. For the 1 year span that I was there, I had seen crude moving through $70 positive to minus negative to a negative one number for a shorter period of time, and then back to $100. And laundry business is entirely commodity dependent. So that posed a huge challenge on how do you walk the tightrope of managing profitability and as well as growth. And hence, as a CFO, it also became important that you do not get too short-sighted by profitability, but also keep the longer-term interests in mind. So we started having weekly, fortnightly pricing discussions, and took a lot of portfolio calls as to where do we need to take pricing, where do you need to give up margin. And I must say, while I'm not handling that business anymore, that business is delivered well in terms of competitive both top line and bottom line growth. So one is of course, the challenge that the CFOs have to go through in terms of managing stakeholders' expectations and the business priorities. The second is, of course, when we bear the steward or the controllership hat as to how do you communicate information in a more authentic and reliable manner, and how do you build the requisite controls. And as you said, Ramesh, when things go wrong, obviously, this is where the CFO's neck is on the block. But when things are right, nobody actually compliments. So this is something that CFOs have to be constantly on the watch, and which is where you have to think ahead in terms of what are the right processes and controls that you need to embed into your system so that you can preempt some of the changes which will happen and not be looking back in the mirror and thinking that this is what I should have done. So that's all from my end, and probably I'll hand it over to another of my peers.
Thank you, Subra. As when I come to the question and answers, I'll definitely be asking a question which, you talked about volatility in prices. Particularly crude, and you said we take pricing decisions. It's all about managing volatility, correct? Now, the question I will ask later of the panelists, I'm just giving you a heads up, is, what should CFOs do? Because what will market reward you? Let's assume you did not hedge a risk like the thing which you said, or you hedged a risk and you protected your budget and you protected volatility. You achieved your budget, you managed the volatility risk. But your competitor did not hedge. And your competitor produced better results because the market moved in a certain direction. The prices moved in a certain direction, whereas you had covered and therefore you are locked into a certain cover. Whom will markets reward? Will markets reward the person who produced better results, or will market reward somebody who is hedged into positions like you did in terms of trying to manage volatility, mitigate the risks involved, which is all more internal in terms of how you've achieved what it is. You may have achieved your internal budget, but when you compare entity A with entity B would have taken all the risks and produced higher, better results. So that is a question which I would like feedback from all of you, because this is something which people always look at. They look at the stock market and say, look at this company. It has given so much returns to investors because stock prices have gone up. Clearly, does somebody look at the risks which that company has taken in giving the returns to the investor? So I'll come back to you on that. Thank you very much for your brief introduction.
Thank you.
And I'll move on to Nitin. And Nitin, again, all yours.
So good afternoon, and thank you for all these comments, Rameshji, for based on your wisdom and gems of brilliance that you have shown. I started my career in 1985 after passing from IIM Ahmedabad and joined a textile company, which is a traditional company. It was a small company with 40 crores turnover, with a lot of diversification, growth, expansion, aggressive growth to some extent also. And worked there for 23 years. Unlike many IIM graduates who move from organization to organization. So worked there till 2009. Was designated as an executive director of a publicly listed company at the age of 36 years. Maybe the youngest in the country in the professional companies. 2009, I joined Zydus as the group CFO. Initial function was finance. Later on, after some years, IT was added. Thereafter, legal was added, and now do multiple other related roles, including working on major assignments, M&A, cost reduction, zero-based budgeting program, onwards many new things. Very very interesting journey. Talking about challenges, I would divide challenges in two parts. One, business-related challenges, and second, function-related challenges. When I say business-related challenges, if I talk of textiles, it is the industry with a high or unfavorable capital turnover ratio. You invest 100 crores in capex and you have 100 crores of turnover. So margins are always in pressure. You are susceptible to crop. Is a good crop or bad crop. If it's a good crop, then government comes out with minimum support price again, so it doesn't leave any opportunity of making a good profit. Highly capital intensive, highly working capital intensive, highly employment oriented industry. Then I talk of pharma. Business challenges are if a company like us and many large companies that way. Well, US is the market. A lot of channel consolidation US taking place. Generic price erosion. Regulatory action in terms of warning letters, foreign exchange fluctuations. And Rameshji, you just talked about that. So on foreign exchange fluctuation, very interesting exercise. Before few years, somewhere in 2013-14, we said let's enter into forward cover. Where dollar was at 45 rupees, and we were able to get 47 rupees. Like Subra mentioned, you can clock your earnings and maybe do to settle better. And when we clocked at 47 rupees, the dollar had to go to 50 rupees plus. So then thereafter we said, okay, let's go for range forward. So I decided the range, which is again beyond my budget. So we had a range up to about 55 rupees, after 2 years, and the dollar went to 60 rupees. The learning was that you can never beat the market, and one should never aspire to. That was a learning. So we said we have a lot of exports and very lesser amount of foreign currency loans. Let's keep it natural hedge. What I've learned is that consistency helps rather than taking a bets. taking a bets is like, playing on the stock market. So we are a business people. We should not play with the market and not take a stand. Take hedge, which is a business-like hedge. And if you are comfortable, take the natural edge, which is what we have consistently then, after several years maintained. I think the results are fantastic. Having said so, we still take, for example, time to time calls where the rupee rates are very soft. I took, at 4% interest commercial paper, did, give that as a loan to my parent, my subsidiary company US, repaid all foreign currency loans in US, and then tried to a forward cover to get something more than 4%, making my, borrowing absolutely, with a negative interest. So I think that kind of, opportunities also one can take. Function related challenges, what I'm talking about are, things related to like the capital structure, design, debt equity ratio, dividend payout, large capex, M&A, where you need to have, conviction and also internal alignment, because the stakes involved are very high. What in terms of learning, what I've learned is that is no shortcut to success. Hard work is important. Remaining up to date every time, what's happening in the market is important. When I changed from textile to pharma, I said I don't know anything of pharma. So just to even acquire some basics of pharma, I did MBA in pharma management. The point I'm trying to say is that one never, is late in terms of anything new to be learned. Job changes, my experience, for aspiring CFOs, that don't change job just frequently, just for the sake of it or to get some more money. Unless there is, convincing case, unless you find that the growth opportunities are less. So in my entire career, I have only 2 jobs. One is Asima in textile, another is pharma. Okay, so, and I don't repent for that. So there are a lot of opportunities which can keep coming in the organization. CFOs are the people who are trusted people. They need to be reliable because they have confidential information about the business, especially for listed companies. That becomes much more important. How I contributed to this group, I think in last 13 years of my existence, obviously with the support of many people, sales is 5 times, profit is 8 times, and market cap is 16 times.
Wow.
And I have my modest contribution in that. Thank you.
Wow. Thank you very much, Nitin. I think just 2 things. One, I don't know whether I'm ahead of you or behind you. You changed jobs only twice. I never changed jobs in my life. So
yes.
I don't know whether that means I am ahead of you or behind you.
No, you are ahead of us, sir.
No, some say 45 years you have not
and
changed.
And sir, I changed the job only because while, monetary there was a growth, career-wise, there was no growth. And I thought that I should not become a burden to the organization. That was a very, very different kind of situation where I left the job and continued to have extremely good relations with my previous employer.
I know I've had people tell me, because I've never changed a job, they say maybe you didn't change a job because you were never fit for any other job than what you were doing. Maybe so. It was never tested. So that's a different thing. But the second thing, which at some point in time I would like you to describe, you are in a pharma industry, and pharma is one of the biggest threats to pharma industry is regulatory inspections. And let's say FDA inspection for those who are significantly exporting. And FDA inspection is not an ordinary thing to pass. So how does a CFO help in preparing organizations or facilitating passing that biggest exam, which can bring the business to zero overnight if the FDA doesn't, give clearance to the manufacturing facilities? And that is, and of course, there is a domino effect. Then market price drops, that the share price drop, and there's a whole host of brand damage which happens. Recalls will happen, litigation gets triggered, whole host of things. So you are in a very vulnerable industry, particularly in this, and I would be keen to understand what a CFO does in this. So when the questioner, you can pick when I ask about role of CFOs, etc. You can describe what exactly you do is to facilitate or to mitigate this biggest risk for that.
Sure.
So I move on to Sandeep. Sandeep, you are really versatile. You handle a lot of things. You're currently also handling a wide spectrum of things. So to begin with, at least your own story before we get on to Q&A, Sandeep.
Sure. So thank you, Ramesh, and thank you for this opportunity. So I grew up in the city of joy in Calcutta, and as soon as I qualified, I mean, Calcutta at that time had very few companies, but amongst the aspirational ones, ICI was there, and they had ICI had its headquarters on Chaurangi, and whenever you went past that building, there was a sense of envy. And when I got a job with ICI, I said my dream come true. So worked with them for 21 years. Uh, Started from ground zero, and I was fortunate to get plenty of good breaks, diverse opportunity, um, including what I believe to a large extent shaped my personality. Was in ICI, I got two business roles, totally outside of finance, totally outside my comfort zone. And ICI thought they were kind of grooming me for bigger opportunities. And I think working in that um environment where you are outside your comfort zone to a large extent shaped uh, me as an individual. Certainly, what I learned in ICI being a multinational was the importance of systems and process, and which is why they would rotate people very often. So, in the 21 years that I was there, I did, I think, 8 or 9 jobs. So, every 2, 3 years, change in job made me ready to operate in any kind of an environment. But I think most important was uh, the trying to live on the other side of the fence and see what is it that the business wants. And I remember one incident, ICI being the majority shareholder, they owned 51%. I remember one incident when I was CFO. Um, the parent company wanted to kind of take out some trapped cash, and they identified maybe buyback as one way that they could utilize the cash. They would not participate, but using the cash productively. And in that meeting, I thought everything was a done deal. The board and all, everybody had agreed. But we found the independent director saying no. And the board, the majority directors did not know how to react. Suddenly and we had pretty august independent directors. They said, no, we don't agree to the price, and everything went fat. So that kind of told me that you can never take anything for granted. A simple thing like a buyback with a body, there's no third party regulator, but your own board is not agreeing to it. So of course we went back and redid the sums, which is all separate. And for after having worked in ICI for 21 odd years, I got an opportunity to come to Bombay when I joined Pidilite. Pidilite is and was at that time largely a promoter-owned company. And one of the concerns that I had when I was shifting was about the whole quality of governance in a promoter-owned company. Having worked in a multinational, I said, look, the only thing I will take after I retire is my reputation, nothing else. So that is not something that should ever get compromised. Of course, that was never a concern in that organization, but there were other challenges. It was a company where the board was, or the promoters were in the board as well as actively involved in the management. They wanted to disengage, focus more on the board and let professionals handle management. So I was kind of amongst the first who joined as a part of professionals who came on board at that time. So there were kind of two responsibilities that I carried. One was that for the outside world, I was a professional CFO, and whatever Ramesh you articulated about what everybody else expects from a CFO. But I had an additional responsibility. A lot of people were joining Pidilite with my name as an example. That see Sandeep has come on board. So it's a validation of all the right things that are being done. So I had to also make sure that colleagues that were coming on board were being
Sandeep, we can't hear you.
and I think Pidlite was an outstanding journey for me, which is where I really learned what makes a company successful. Concepts of ownership that an employee should take and demonstrate without maybe being a financial owner in the corporation. You know, most people confuse about ownership. One of the biggest challenges, at least in Pidilite, was that I personally came from a multinational, you know, where everything was defined. You had defined what we used to call delegation of authorities and, you know, whatever. So everybody knew up to what value he can approve an expense. And here there was nothing. So employees coming in will ask, can I sign a check for 1 lakh? Can I approve an expense of 1 crore? And the promoter would say, why do you want that authority? You can do anything. This is your company. If you treat it as your company, you can do anything. If you think that you are an outsider, then you will struggle. And that was a big mindset change that I think a lot of people struggle to do. But I certainly enjoyed that 7 years that I spent. And then came the opportunity to move to Crompton. So Nitin, I'm one company behind you. This is my third job. So I joined Crompton in 2015. At that time it was looked like a bit of a risk, you know, leaving a well-established company to join a business that was being demerged, where there was private equity. So what attracted me was the fact that now here there is a private equity as a promoter, and the fact that private equity is a mercenary. They will come, they will extract value out of the company, and then they will monetize their investment. So that was the thesis that I had heard of, and so obviously I had to kind of deploy all that I had learned in my first couple of jobs into Crompton in terms of building systems, processes, managing stakeholders, and doing a lot of the basic stuff, which, you know, obviously in the first couple of years I did not very much enjoy it, including SAP implementation. It was like working in a startup where the business was good, but the processes were non-existent. So building, you know, a business or a system or a process from zero required obviously managing interests of all stakeholders. It was, you know, unlike most people thought that private equity will come and, you know, take out juice from the company. They did nothing. I pleasantly was very surprised that they said what is good for majority is good for minority. So they did not own majority stake. They said if what is good for 100% of the company will be good for us, we own about 34% of the company. And since then, the organization has transitioned. It is no longer a private equity owned company. We now are 96% held by public shareholders. So added responsibility that now you are responsible to 96% of your shareholders, because they expect that you will take care of their interests. So that's been the journey. As I said, lots one has learned as the role has transformed. And just to reflect on what Ramesh was saying is about, you know, how have our journeys been. But I also look back at the CFO who was there when I joined ICI 36 years back. Would he be able to you know, survive or deliver in the current kind of an environment? And I look at intervening CFOs who one has worked under. I certainly, you know, I think they would have struggled at that time. But you know, at the end of the day, I believe the CFO is a designation. The person is a manager. We are all managing, and our main role is to manage resources and manage them effectively and efficiently. So if we take that approach first, then whatever may be the external environment, whatever may be the challenges, I think those we will be able to overcome. And this is something that I learned in those couple of business stints that I did with ICI. Thanks. That's all that I had.
Thank you, Sandeep. That's fascinating. Just three things I pick on what you said. The first, you talked about, gave the illustration of independent directors rejecting a buyback proposal. It highlights more of one of the roles of a CFO is about managing boards, is about being the bridge between the management and the boards. And that's a very, very critical role which the CFO plays in building trust. And that's the key word, because if boards tend to trust, then they won't reject any proposals unless if they see something. But that's a very, very challenging role, and you can describe more of it when we talk about roles of CFOs. The second point which you made is that when you joined Pidilite, a lot of people joined Pidilite because you joined Pidilite. Right? So the question then is a CFO also a magnet for talent? Is that also one of the roles of a CFO? Because everybody, is it talent management only an issue, a function of the HR or the human resource function, or is it a talent leadership, talent management, attracting a talent, preventing attrition, also a role of a CFO? Because if you say you have a leadership role, then you as leaders, shall I say, project a model for others to clone, and that becomes also a critical thing. The third thing which I liked very much in what you said, which you can again further elaborate as you go along, is that CFO is a designation, but that is not the role. It's only a designation. What you said about being manager makes a lot of sense in what it is. And thank you very much for pointing that out. We can take on from that in terms of role and at least bury the fact that CFO is a designation. We don't have to, get carried away by that designation of a CFO. In different organizations, it is different, and I have some questions around it. So thank you very much, Sandeep, and let me move on to the very eminent Sri Ramesh Subramaniam. Ramesh, I know yours is not just the last word on this matter, but yours is also a very important word in this subject in the opening remarks.
Thank you, Mr. Ramesh. Always a pleasure to hear you. And I think that, even without all of us speaking, by this time, you have added already enormous value to the entire discussion, which is normal with you. So, Rishi, thanks for inviting me on this. So I'm hearing all of you. I mean, just a quick recap of my journey. I've been in this for 30 years now. Started as a typical accountant, as many of us would do. I'm not a chartered accountant, I have declared. I hope that it's not by mistake that Rishi missed that point, but I did not do CA. The only salvaging thing is that I did not try to do CA and failed. So I did not even attempt. So that hopefully does not say much about whether I would have become a CA or not. But having said that, that's too late for me to consider now. So I worked across different industries. Started with actually a steel company, completely was family owned in Bombay. That's when I landed in '92, exactly 30 years ago. And then I moved to HUL, which was probably my most, I would say, rewarding stint in terms of really learning. It's huge learning, as Hindustan Lever always has been. Spent not actually very long, 8 years. Did 2 stints. That's why one of the stints was in Calcutta, which was very good, I would say. And then I moved around a couple of companies, Monsanto and Siemens, before I landed in Tata Group about 15 years ago. So this is my 15th year in the group. I just actually very recently moved from my CFO role, which incidentally is something which I engineered in a way to say that I've done a lot of stuff and thought that let me do something which is slightly more than the routine CFO role. So it's very early days. I can't really describe how it evolves as it goes along. And I think that during my journey, some of the things that I really strike me as we were discussing in the last 15 minutes is that actually the role of the CFO was never this way. When we started our careers, we never imagined this would be the length and breadth of that role. I think we restricted our thought process to finalizing balance sheet and audited accounts and at best, doing some investor interactions. But it has just traveled way beyond in these years. And one of the things that strikes me is that our education never really has those components which have become very crucial for a successful CFO role today. I think all of us have grown into that roles. We assumed that roles and then understood what is required and developed ourselves on the way. So I think the learning part, you cannot underestimate the fact that you can't come with a degree and then try and become a CFO. It's a continuous evolution. As I found out that from becoming an accountant to a commercial manager to a head of finance to a CFO has been huge steps in terms of our capabilities and maturity and also, I would say, delivery expectations. And what also strikes me is that, at least I found in the last 12 years have been more or less in a CFO role, I would say. And what I really find is that there are some things which are unsaid and are not expected when you take up that role, which is about how much involved you are in strategy formation, how much you are involved in really understanding business needs, how much involved are you in people management. I think these things we are not actually, this is not our fundamental role. And I think, Mr. Ramesh, you just mentioned about leadership development and people capability development. I think that these are things now are becoming the differentiator. Once you reach a certain level, then I think the differentiator is about, can you develop people? Can you manage your senior stakeholders in a more holistic manner? Can you add value to strategy of the company? And I'm realizing that, these are all things which nobody teaches you. You just have to show interest, develop your own thesis around it, and then watch your peers and seniors and people whom you look up to and learn. The other thing which in my journey, which I found I was completely unprepared for, is when a complete change happens in the board and chairman and the entire audit committee, for example. So it's a huge transition management that you have to do. And you don't know, actually, nobody's trained you for that. And it becomes a big challenge because what is given is questioned, status quo is challenged, and that is the time when you're tested heavily. So I think the fundamental point that I'm trying to come reflecting on my journey is that the core accounting skills and the core, I would say, skills of treasury, controls, controllership, budgeting, MIS, they are not going anywhere. They are given nowadays. And nobody even asks you whether you know it. But I think the bigger questions is, can you set the systems right? Can you ride on those systems and focus more on business side and add value? Because the board is expecting you to actively challenge the current strategy and the thinking of the CEO and healthily challenge it, not become a stubborn bean counter trying to say no to everything, but rather shape that thought process, and try to moderate that, ambition to a level of realism. And I think that is where it becomes a big challenge to kind of not get up and set up a fight with the business teams and the CEO, but become a value adder. And I find that is a very critical part of success, which is there. And lastly, I would touch that I have never seen that the need to understand global trends in terms of geopolitics, in terms of commodity risks, in terms of economic risks. I think that need has gone tremendously. And I think sometimes even I find it very difficult to grasp some of the bigger changes that are happening. And why it is important is, in a CFO's role, you often have to take decisions keeping in mind some of these trends. And that is where your knowledge base and your grasp of some of the basics around these issues becomes a challenge. So I think the whole idea could be that you may not be the expert, but can you actually get people of the right type to explain you and kind of advise you on those matters so that you don't end up doing a big mistake? I think those are the things I would add to kind of sum up what I have, in my view, gone through this.
Thank you, Ramesh. That was absolutely very, very useful. You set the context for the next set of questions which I have. But, essentially, I liked what you said in terms of the role going beyond a balance sheet. And that is something which perhaps is history now, being responsible for the balance sheet. And that is, as I said, when I gave my initial comments as to whether a CFO was responsible for living in the past or reporting the past, or was he responsible for managing the present, or is he responsible for shaping the future? These are three different ways one can get locked into the past. We can get very, very occupied in the present, but at the same time, do you have a responsibility for shaping the future? So I'll combine two questions in one, and I'll throw it back to you and change the batting order in the reverse, and then see how it works. You all have described the role of a CFO. If you can put it into some sort of a snapshot in terms of roles, you see there is a strategist role, there is an operator role, which you mentioned, which is all of the operations, whether it is treasury, accounting, reporting, etc. There is a custodian role of being responsible for the assets. There is a communicator role where you are the interface between the management and the board, you are the communicator to the outside world, etc. There is a compliance role where you are responsible for compliances in a big way. And given all of this, being a strategist and being part of a management team, you're making things happen. In a reporting, you're reporting what has happened. Then you are a communicator. You're not only reporting what has happened, you're also communicating and building trust, whether, as I mentioned, to boards. And so there are two questions which flow from this. The first is, or rather three, you can describe what exactly is the role of a CFO in some buckets. Second, what weightages would you assign to these roles? Because ultimately, which of these roles is the more dominating role for a CFO? And where do you see that heading? And the third is, of course, how then would you evaluate a performance of a CFO in each of this? And if you can help me with that, I think that will be very, very useful. And a fourth question, which is a critical question I would throw to all of you, is whom are you loyal to? Because you're describing a lot of roles. Finally, loyalty is, I know you could be loyal to a lot of people, but whom are you primarily loyal and whom are you significantly loyal to? And I'll have some thought on that, which I will, after you all have described, I'll come back on that.
Right. You want me to go first?
Yes.
Okay. I think on your question about the really focus, or let's say the weightages, let's talk about that. I think the key is, what is the context of the company today? Each company is a different context at the present point. I am finding now that a company needs a certain type of CFO at a certain stage, and at a certain another stage, it needs a different profile. And I'll give you an example. When a typical multinational operating in India doesn't have to take everyday major M&A decisions or major, I would say, capital raising decisions, because a lot of it is decided somewhere else. And they have to focus on growing the business in the country and improving their market share and improving margins. So a lot depends on controllership, costing, trying to optimize on marketing spends, and the whole area of budgeting therefore becomes very important. MIS becomes very important. A lot of distribution knowledge becomes important. But whereas if you are sitting in a company which is actually on a major growth path, then it's a very different outlook. Then you are really needing the domain expertise of M&A, value creation, financial modeling, and strategy. So I think the first point is you have to understand the company context and the requirement which the board and the shareholders have at that point. The second issue is really that within the given situation, I think that today my view is 60-70% is really the core role still continues, which is about the accounting, treasury, MIS, investor relations, reporting, compliance management, and in some cases, legal, that stuff. But at least 30-40% of your time has to be, and I think I'm finding that very minimal, it's a basic minimum to spend on strategy, growth, setting the architecture right for the company, the structure, basically. And also the building on how you're going to do inorganic, organic, all that high level questions have to become very critical. So that's how really and in each stage, therefore, very important is that who complements it. So whether you are in a growth oriented company needing an M&A expertise, or you are a running company with operations expertise, the whole issue is about complementing. So no company can say that I will only do one or not the other. So if you are in a super growth mode and the CFO's focus is 50-60% on growth, then you have to have very strong financial controllers to support you and run the operations side of it. Then you rely on them to take care of much of the routines and then step in only by exception and let them really run largely the operational show. And the reverse would be the situation where you may be hiring investment bankers to help you on the M&A and fundraising and other stuff, whereas you will be focusing more on the operation stuff. So I don't know whether I answered that question, Mr. Ramesh, correct to the point, but that's what I would put the priority setting to be.
So essentially what you articulated is the weightages will differ because it's contextual. When you are facing a crisis, your roles differ. Where you're facing regulatory issues, your role differs, your focus differs. When you are challenged with significant competition, your strategic role, becomes high, rises to the surface. So that's a very good point which you made about role being contextual. So given that, am I to assume therefore that the CFO's evaluation also becomes contextual as opposed to traditional norms by which you would, and if you can highlight also what, and there are two questions as I said. One is, how do you evaluate a CFO? Market price or high growth and profits? Because we heard in one of the initial introductions saying, and Nitin mentioned that as part of his career, when he joined and today, how much the revenue is multiplied by X times, profit by Y times, etc. So would you measure a CFO's or reward a CFO on that basis, or on market price basis, or on managing risks, which Subra mentioned in a way what it is? And so second was on loyalty. Whom are you loyal to? You have your managing director, of course, you have the owners, you have stakeholders, and then you have the public at large. There are conflicts in each of these. So how do you define loyalty?
Right. So I have this loyalty bit is very, very, I think, interesting. And the more widely held you are and the more professional setup you are in, the more challenging it becomes about this loyalty thing. So one thing is very clear. Of course, if you are a family-owned company, the loyalty is largely to the ideals or, let's say, vision of the founder. But after that, when it comes to the ground reality, it is about principles and it is about ensuring that you do your core job very well. I have seen now so many times that we get swayed by what the board wants. We get swayed by what the market wants. And it is very clear there are lots of examples when this tendency to follow the market and follow the, I would say, the crowd has been a dangerous game. And I think this is the toughest part of the CFO job. For example, to resist. For example, in my personal experience, in Tata Power, these renewables bids happen, and a lot of companies bid, and it's just amazing that you sharpen your pencil to the hilt, and what you think is like you have extracted all the possible upsides, and then you have put up bid price, and then you find that you are out by some 30-40%. And then you really ask yourself what kind of a CFO you are. That how come somebody else is merrily bidding at such a low price and he still must be making profit. Okay. And then you ask yourself, what's wrong with you? I mean, are you being too conservative? And I must say that every time I come to this conclusion, and I'm very convinced it's a right approach. As long as you've done your homework, just don't worry. It's only a matter of time that the truth comes out. So you have to stick on your principles and not worry. And sometimes not doing something is more important than just doing something. So and CEOs often force you to take action and do more of something when actually not doing is the best policy. I think that resistance which you have to smartly put up is in fact that's a sign of loyalty. So when I say there, the question is whom are you loyal to? I think you're loyal to your profession, you're loyal to your knowledge, you are loyal to certain principles which you believe are agreed upon. And many times what happens, principles are agreed upon, but the result is not liked. So that's where you have to just stay there and hold the principles. Somewhere someone will see the light at some point of time. So the principle clearly, and this is a challenge which I faced so many times when it looks like you are isolated and you look to be the idiot. But more, as long as you have done your homework, of course, many times I go back and recheck what error we could have done and what possible improvement we can do the next time. There are oftentimes that error happens also, that you miss some point, etc. But I think that many of it is you have to remember that many corporate decisions are taken in a euphoric state with great ambition without any conviction, with data which is not proven, with statistics which are designed to push a decision forward and not to say no. So I think the CFO's role becomes very tough in isolating and getting away from that attraction and then trying to sift the reality and then make it work. So I think that should probably answer the loyalty factor.
Thank you, Ramesh. I think I can only say this. You initially mentioned that you don't have a CA qualification. Unfortunately, the rules don't permit it. But if it were permitting, I think you could have easily been conferred a CA qualification.
Well, it's never too late.
To change the rules, you mean? Well, right, Sandeep, on to you.
So I think I take it the question is the same, right? The context and the role.
Yeah, the question is same. I would like this question to be answered by all, and then
all right,
you can pick and choose.
Got it. So I think the best way I can describe the varying roles is by sharing my experience in Crompton. But to preface, I agree with what Ramesh said, that the role of a CFO is contextual. And in my case, the context did not vary from company to company. The context varied within the same company. And I'll just give a couple of anecdotes and try and share how my role has changed in Crompton. So when I joined in September 2015, in my previous organization in Pidlite, I had a team of, I think, over 100 people who worked in the same office, who reported to me. So when I came to Crompton, they said, all the business teams are fully staffed, they have all the right finance folks. But in corporate finance, we have nobody. You are the only person. And I said, are you serious that I'm the only guy? Yeah, you are the only person. There is no other person in corporate finance, and the demerger date is 5 days away, and you now start the process. So I had to kind of, roll up my sleeve and do the basics for the first 5-6 months, which was to get the two legal entities, or at least our legal entity, becoming freestanding. 6-8 months, obviously a lot of other work happened in parallel in terms of building team. So from looking at something which was very brass tacks, obviously we took help of external consultants. Then the journey moved, now let's make this company freestanding, which meant put the basics in place, implement ERP, implement some other basic systems and processes. Then came functional challenges like GST was getting implemented. In the middle, demonetization happened. So the external environment was in an outstanding state of flux. And here the company was migrating from, let's say, something which had been kind of snatched away from a parent. So a child learning to walk, but the expectation was that the child will start running in no time. And obviously the role of the CFO was to, or my role was to make sure that in this whole process, when from just being born you start running, you don't fall, don't hurt yourself badly, putting all the guardrails in place. And soon, 3-4 years later, we had a outstanding board in place, and the board then started demanding far better performance from the company. So in addition to managing the expectations of the private equities shareholders, you also had a board that was saying you cover a wider range of subjects other than just financial performance. So I think the expectations on the company, the expectations from the board, from being only limited to a few financial KPIs, became far more encompassing. And I think as the challenges came, as the environment changed, as the demands on the company changed, the demands on the CFO also changed. So I think it is first fair to look at what is the environment and the expectations on the corporation. And from the expectations on the corporation, the expectations on the CFO will change. And in terms of, what is the ideal role of a CFO? Obviously, today technology is trying to do many of the stuff which CFOs would have burnt midnight oil 10, 15, 20 years back. And it is important for CFOs then to productively use their time, whatever has got freed up through that. And there are two ways time of CFO has got freed up. One is through digital, and the other one is by building a team. Because I mean, my belief has been that from the time you join a company, start looking at ways you can make your job redundant or your position redundant. So build a team that can do all that you may love to do, or you may, be more equipped or capable of doing. But make sure that you have a team that does all that, so that then you are able to free up time. We talk about all these things about strategy, all about resource allocation. But how will the CFO do strategy or resource allocation if he does not know, or if he does not interact with consumers, customers, does not take time to go to the factory to see how a product is being made? Sitting in the office, in his air-conditioned office, there is no way in hell that a CFO will be able to add any value to any strategy, any discussion. So if you have to go out, if you have to leave the comfort of your office, you have to take out time. Otherwise, if you stay in your office, you'll get bogged down into so much other work that the most important part will get missed out. So in my mind, I think 20%, 10 to 20% of the time, the CFO must try and see how his products are being sold or his services are being sold and how they are being manufactured, because only then will he be able to do justice in any discussion which is about resource allocation. And I think the second part of your question about who are you accountable to, I think the first accountability is to self. I believe my accountability is to myself, to some extent the profession, but to a large extent the person. I mean, you cannot have double standards, one standard in office and one standard outside of office, right? And at the end of the day, I must be, when I put my head down on the pillow to sleep, not have any nightmares or any restless thoughts about what I have done or not done at work. So I owe that accountability first to myself. In terms of, I think there was another point about how do you measure a CFO. So I have two thoughts on it. One, I think, is internally every company will have some KPIs. Most HR folks will have goal sheets that cover either 4 stakeholders. You have the balanced scorecard approach, or you will have some 5, 6, 7 KPIs. So if I leave that apart, because that is, again, contextual company to company, I think the best way to measure the CFO is to measure the company, because CFO doesn't exist if the company doesn't exist. So you first measure the company.
I'm tempted to come in here
Yeah, okay.
if you allow me, to add to what Sandeep said. I mean, it's very interesting. Uh, you know, uh, going by, what is the measure of the success of the CFO? For example, last 18 months, our, Tata Pass market cap went 10x. So strictly speaking, the last year was a brilliant year. So, but if you really ask me, I think the effort that goes in the previous 2 years to set the foundation is actually the year in which we should actually say that the performance has been the best, because that really lays the foundation. For example, we were struggling to figure out the right strategy, and as a head of corporate strategy, it was a big effort by the entire team, along with the board, to challenge each other and come to a conclusion. But very often I see that a CFO often has to do some foundational work, which reflects after 2 years or 3 years. But so therefore, performance on market metrics, I would be really a little wary. And I would really see that the people who know what's happening should be aware of what was important to be done at that time, and did they do it well or not. The result, of course, will come a bit later. So just a slightly contra view, which I thought I'd share.
Yeah, it's not so much a contra view as much as more a question of timing. And I think in some situations, it may not be as far away as a strategy in 1 year and the results several years down the road. What essentially Sandeep was trying to bring about is the results of the actions get reflected in a company performance.
That is true.
You could have a great strategy and the company finally performs poorly. The test of the strategy comes in there. Though there are many other variables of what competition does, what the market is, what laws and regulations are, what the geopolitical situation, many factors could shape, include the implementation of strategy. But I'm glad, Sandeep, thank you very much. There are two consistent points both of you have made. One is that the CFO's role is contextual. Second is the loyalty is to principles, is the word Ramesh used, and Sandeep, you said loyalty is more to yourself first. You should believe in what is right. It is not about trying to follow somebody or please somebody or live up to somebody else's expectations. You should have your own expectation, if I've understood you all correctly. So given these two very consistent messages, and the third message, which was there about the performance evaluation, broadly consistent, except the issue which Ramesh pointed out is of timing, where Sandeep more about the company does not exist, the CFO does not exist. Given that, let's move on to Nitin and then Subra, and then listen to both of them. So you heard some very consistent messages. You could even agree or disagree and move on to whatever else you'd like to say.
Certainly. The certain views are common in terms of the situation of the company. Like in my previous job, when I was in Asima, where there were some financial, stress situations, survival was very important, goal and KPI. When in Zydus, where is a growth-oriented organization, growth is very important, both organic as well as inorganic growth. As a part of that, the CFO's role also is to, think about future, after next 5 years, next 10 years, what this group will need. For example, it was somewhere in 2015, in one of our leadership website meeting, I suggested to top management about having a decentralized set up for the businesses. So business controllers should be made more empowered, and very few tasks should remain with the corporate finance job. And our chairman and managing director Pankaj Patel that time said, I've hardly seen people like you would put X on their own feet by saying that let these tasks be done by somebody else. But that is, I think, is the requirement. And to be yourself and to true to yourself, many times you may have to tell certain things which the owners, promoters, or management people don't like. And obviously the tone can be as polite as possible, but still very firm in terms of your view. Let me give two very small examples. When I was interviewed by Pankaj Bhai for the CFO position in 2009, he said, your previous group had certain financial difficulties, and as an executive director, how you could not stop that. So I said, I have my role to play, and I already advised them not to do certain expansion which were not making economic sense. But promoters had high ambitions. So he said, maybe this is the reason you are trying to avoid your own failure. So I said, you can note down the mobile number of promoter and chairman of the company, and you can right away call him and tell that Nitin Parekh is sitting in front of me and he's telling that he advised you something, but which you overruled, and he will agree to that. So that kind of conviction is required. And even in my present job, it happens many times when on strategy matters of M&A acquisition, at what price we should go for acquisition. If I have a point where sometimes the management becomes bullish, I say, no, this is not the price we should be able to pay. We should not be paying that because it's a costly deal, and return on capital employed will be affected. Even in terms of resource allocation to different businesses or different geographies, whether India, Europe, US, or other emerging markets, or within group, was biosimilar business versus vaccine business or transdermal business or injectable business. There have been heated discussion many times in terms of resource allocation. And I said, yeah, as the owners, obviously you can overrule me, but I would not change my views. So I think that loyalty to your as a profession, on an objective matter, I'm not talking matter of which is an ego matter. It's what you feel that it is right to be done for the company. And beyond a limit, a professional is nobody to say that they care more for the company than the owners themselves. But still, the views are views, and to the extent you feel very objectively about your views, it's your duty to put these views in front of the management. In terms of KPIs, I believe that the KPIs may again change from year to year depending on what is important. For example, in 2019, when we are doing acquisition of Heinz India, my office started at 7 o'clock and almost ended at 11:30 in the night. And I fully busy, on the like a war room, working on that acquisition, which was the largest acquisition in the history of Zydus for 4,600 crore. So that time, the very important KPI was that successful acquisition and then transition and integration. When I was last year only during COVID time, we were working on a divestment of our animal health business. So that took 6 months of my very engrossed time, and that was very important KPI. At times it was a cost reduction, some resource mobilization, sometimes zero-based budgeting, sometimes implementation of S/4HANA. So this keeps on changing, as the organization needs change.
Hi, Ramesh.
Thank you. Subra, yours. I think, again, very consistent messages. In a way, when he spoke about conviction, he reinforced the point that you have the loyalty to yourself. You have to be clear in what you think is right and communicating what you think is right. And I think that is the whole subject of, we talk of independence. One of the principles there is intellectual independence. And intellectual independence means you speaking your mind, you're independent of mind, in intellect, and therefore communicating that. Thank you, Nitin. Subra, yours.
Ramesh, the beauty of being the last is you can just say, I agree with everyone, whatever the views of my panelists are.
You don't have to necessarily agree.
You can also.
But I'll take the last question first, which was around whom are you loyal to? I would say the CFO's loyalty is towards the company, because ultimately a CFO is in a fiduciary position. So dependent on who's a stakeholder. So the loyalty if you're too biased towards your management or towards the board or towards, let's say, shareholders, then it's difficult for a CFO to get swayed by what is the immediate priority. But if you're loyal to the company, you'll always talk what is in the best interest of the company. Secondly, I think that my fellow panelists have spoken about independence of thoughts, authenticity of thoughts is very important. For instance, if I talk about my personal example, I have always distanced myself from talking the popular vote in the room, popular opinion in the room, and whether it is liked or not. And initially, it is not obviously taken with a lot of pride. But I remember when I moved out of my last company, there were 3 adjectives which were given as part of my farewell speech: curiosity, commitment, and courageous. To describe that this is the trait of a successful leader, that how curious you are in terms of identifying the key blocks which are moving around you. Commitment, which is anyway table stakes at this stage, that everybody needs to be committed, and courageous, not be afraid to call a spade a spade. So how do you get this trait and fully practice it? In terms of what is the role, whether it's a strategist, steward, a controller, or a operator that the CFO needs to practice? I fully agree with my fellow panelists that a CFO has to don many hats, and it depends on the stage of the company and the evolution stage. For instance, if it's a company which is where you have been identified to get a transformation agenda, it will be more of an operator. But where it is in the cusp of a strategic overhaul, where it's on the path of growth, then you will play more of a strategist role. So it will depending on the stage of growth that the company is.
Good. Thanks. I think you've articulated well, and you in a way confirmed everything, except I'll take you on a point which you made, which is a CFO is loyal to the company. And you also talked about speaking out, which I think consistently everybody has. Now, on loyalty, you know, if you, I'll recall a book written by the former FBI director called his name was James Comey. He wrote the title of his book, I think, A Higher Loyalty. See, in effect, he had that difficult choice as to whether he should obey Donald Trump, who was his boss, or should he follow the Constitution of United States of America. Is his loyalty to the people of United States of America, the Constitution, or is it to his boss? This is, so in a way, I think all of you articulated that higher loyalty, that not only are we loyal to ourselves, you said company, in effect what you meant is I'm not loyal to individuals, I'm loyal to something which is much larger. And that is very good. I'm glad to hear that message coming from all of you CFOs, which is far different, but it has its flip side. The flip side is that often in management, we say, it's fine for you to express your views, as Nitin talked about expressing a view. But once a majority has taken a view, then it is for you to fall in line, and you can't be inside and, you know, you dissent from the outside. A group has taken a view, then it's your job to implement that. You made your point, go along. Because if everybody were to make their point and persist with their point, then organizations will never succeed. So you are, as George Bush said, you are with us or against us. So one of the two, you make up your mind after you have made your points in a way. And I think that is a challenge. Now let me shift gears and go on to a subject which is core to your heart in a way. And I'll have about 3 or 4 questions each one of you can take, or, you know, I know we have to also leave time for the participants to ask questions, but very quickly, what bothers me, you know, the CFO is a fine-ish term which is there, the chief finance officer or whatever term you may like to use. And it implies, and a big part of the role is financial reporting. The simple question I want to ask you is, Do you think the current day financial reporting serves the purpose? You all have been part of investor calls, you've been asking questions, yet you produce a document which the answers may not be in that document at all. So do you think that the accounting or the financial reporting the way it is today has outlived its utility, and therefore there is need for something which is different? Equally, there is talk of integrated reporting because people want to every other measure to come into a report in what it is. But the simple question is, what do current day investors seek? Do you think your present financial reporting meets its purpose? If not, what do you think it is? Who would like to pick up? Yes, Nitin, go ahead.
So ours is also a listed company, and we keep interacting with the investors. Obviously, one on a part of quarterly results call, and otherwise also with group meetings, individual meetings. The major requirements or major questions from investors are largely in terms of understanding better the business operations and the profitability part, the growth part. So but I must also say that many of them, large majority of them, have a short-term orientation, next quarter, next year, at the most 2 years kind of thing. And their primary area is what is going to be the revenue growth, from where there is coming, because we have different geographies. So what will be the growth from India, from US, Zydus Wellness, etc., etc. What kind of EBITDA expansion is likely to happen? What kind of ROC improvement will be there, etc. So these are the broad questions: capex, tax rate, etc. But when you say that whether the accounting handles these aspects or not, because accounting is in a way, as you agree, is a reproduction of past. What has happened. So what has happened is a statement of fact, and I believe that requirement of Companies Act, requirement of CARO, LODR, I think all of them put together, if you find, I think these are enough of information in annual report. And then we kept on adding. Now, this year BRSR is going to come, which will again have a lot of information. The reports of companies like us are about 250, 300 pages. So sometimes I will say, how many people are going to read all of these things? And should we still keep on adding more information to that? When it comes to future, the future is obviously a matter of vision, aspiration, obviously is uncertainty. There is nothing like a guarantee for that. There are forward-looking statements. But there again, now there are investor presentations which are also, put on the website of the company, and various statements which are to some extent of forward nature come as a part of management discussion analysis of the report. So I believe that while it is every time evolving, after 2, 3 years, 5 years, again we'll find something more required. I think where we are right now is adequate in my view.
I'm not too sure, because MD&A can become a advertisement document in terms of speaking out what you think the reader, you want to communicate to the reader, as opposed to what should be communicated to the reader. The challenge which in financial reporting is, does it serve confirmatory value or does it have predictive value? The second point which I want to work is, when you go for a blood test, you get a report which not only tells you numbers, which tells you whether it is within range or out of range. Our current financial reports don't tell you anything. They are a set of numbers.
Yes.
Leaving it to even the more informed user cannot make sense out of it. Similarly, it has very little predictive value, because you would have lost a major customer towards the last day of the year, and you wouldn't even know the results won't change. Foreign exchange is mark to market at the end of the year. Next day morning, the rate would have changed. The result would have been dramatically different. Right? But you are, by accounting rules, you are locked into your accounting rules, which is marked to the year-end rate. Though the year rate next day we have changed. So there is it's so watertight, so rule-bound, so inflexible. So that's why that question, and anybody else would like to react, I'd be happy to hear that.
Let me take a shot at it. This is a favorite topic of mine as well. My answer is no. Today, the financial statement is quite, to me, it looks like it's quite becoming irrelevant. Because when I look at the stakeholder at large, who are the people who read these financial statements? There are sophisticated investors who want to get into some detail. Many of the retail and small investors don't have the energy to understand in great detail, read the schedules and the accounts and the last fine print in the notes to accounts. I don't think they have any clue about how some accounting treatments are actually. And even frankly, as a CFO, I sometimes don't understand the logic of some of the treatments that we give, because it is nothing. It is not really directly commercially related. It goes by certain generic principles, which could be very, very different for in reality. But I mean, not that they are representing anything false, but it just makes it more artificial. Now, so coming back to what is the expectation? What they want to know is, directionally, are you going to make more money for the shareholders? Directionally, are there indications? And I think the limited, in my view, the limited benefit that the financial statement serve is that when you are giving them some promise and the financial statement reflects the reality, is that reality in line with what you've been saying? The moment there is a linkage to what you say and what you actually deliver as a financial statement, I think the financial statement just help you to validate that view, that whether the company, in the view of the stakeholders, is doing well or not. And to that extent, it is useful. But if you look at performance today, most of the analysts, for example, they are looking forward. They are looking for more clues on where this thing is going, what are the company's risks, where is the company playing, how that market is changing, who are the global competitors, what competitive advantage it has. So a lot of predictive piece is completely missing in the financials, barring, of course, some MD&A where we give some standard, gyan and lecture on risk management and stuff like that. But the point is that beyond a point, it is now becoming a very sophisticated investors world, where very few investors actually can conclude for the larger audience as to what the company is doing and how it is performing. And to that extent, the relevance of the financial statement is going down. The other side is about the fact that whether governance standards are being properly done. Are there major holes in the way the company is managing? To that extent, the financial statement is a powerful tool, because the auditor has to reveal what is not right, and if there are issues, then he has to highlight. And to that extent, it is a very good thing. The other aspect that is now becoming a big issue with this whole topic is the fact that the sustainability of the company itself there is no proper measurement yet, although we've taken baby steps in various ways of integrated reporting, PFCD and all that. But at the end of the day, it is still early days where one could holistically say that this company is not only doing well, but is likely to be standing there for a longer period of time. That's the expectation. Actually, the reader would want to know whether it is sufficiently covered for the future risks which it sees. I think those metrics and measures are in early stages. So I think that's the way I look at it. It is yes important, but it is not really the most important thing to look at to measure.
So in a way, we have had two contrary views. Anybody would like to add anything? Sandeep, you want to say anything?
So surely the way I at least look at this topic is in two parts. Financial statements, to my mind, have three key stakeholders. One are lenders to the corporation. Second is the government. And third are shareholders, investors, etc., etc. So I think to the extent that it gives an assurance that the company actually has what it claims to have, obviously subject to audit, verification, etc. So the interests of maybe the lender and to some extent the government may get served. The second part again is that whatever standards you have, they also serve a purpose that you can then compare apple to apple. Because if standards vary and we have different standards for large companies and different for small, how do you compare performance, infirmities in the standards notwithstanding?
There's
So to that extent
also, because if you follow WDU method of depreciation, the other straight line.
Yeah.
One is a different breed of apple, and as opposed
True.
to the other.
That is true. That is true, sir. That you can have Manali apples and Washington apples, but
Exactly.
that's for another. At least they are apples. But I think the point that you very rightly said, that are these financial statements any basis uh, for looking at what the company is future performance is going to be, or even what has maybe impaired the performance of the company overnight but not getting reflected? To that extent, absolutely correct. Do I have an answer to it? Certainly not, sir. I don't claim to have any knowledge or wisdom, but I 100% agree with your point of view that the standards are such that many material events somehow will never even come to surface. You will comply with standards in letter and in spirit, but these issues will never get identified. And I think that is where experts and folks, people in your of your capability are needed to shape it. But I really don't claim to have any knowledge on what has to be done. But I certainly agree with your point of view.
Subra, anything
Yeah.
you want to add? Subra, anything you want to add?
Ramesh, nothing in specific compared to what my fellow participants said. I think the journey of integrated report, if I must say, was well designed for that purpose. And how do you make financial information actually talk about value creation, talk about what are we doing against various capitals? Though it's obviously backward looking in a way, but it's also a onus upon the management on how do you make the information much more sharper, concise, and linkage to the objectives. Because if you do that, we could perhaps have a mid path. Because as a proud member of CF fraternity, I don't think that we can keep having fiction or keep having more of figments of imagination, so to say, that in future I'm going to grow, because then there will be my judgment versus somebody else's judgment. And so long as we are adopting the path of talking about what has happened, but also linking it to the various elements of and talking about in terms of value capital generation through integrated report, I think that in a way serves the purpose. Regarding investors, there are of course fringe investors, retail investors who are more interested in short-term value creation, short-term measures, who are not so much interested in financials. But there are lot of long-term stakeholders who really want to understand how the business is performing consistently, competitively, which of course the financial statements do not give any flavor to, and whether profitably and also sustainably, that how are we performing under all these measures. If we can bring out those elements in an annual report, that will make it much more holistic rather than focusing only on one aspect.
Right. Where I was leading to is what I mentioned in my opening remarks about information having to be absolute, current, or live. Take, for example, mutual funds. Who cares for the mutual funds annual report? Everybody is worried about that day's NAV because there is entry and exit happening almost daily basis in volumes, right? So see, if technology enables information to be available real time, maybe there will be a time where an annual report may become less relevant as much as the frequency of reporting. Today, already regulations are moving towards that incident reporting. You have to notify stock exchange. At the drop of every hat, everything you have to notify stock exchange. In a way, you're notifying the investors. The next thing is being able to measure that and being able to report the effect of that. Maybe we are leading towards that. Now, let me again switch gears and move to a topic which is somewhat sensitive because you may have to wish to comment on your colleagues in your own profession. Corporate failures, corporate frauds are being witnessed in India and abroad, including in very large companies, not just small companies, etc. And auditors are blamed, everybody is blamed. What do you think are the causes? Do you think CFOs have a role to play in preventing corporate failure and corporate frauds, given all what we are seeing? Where do you see, CFO? Doesn't it disturb you all? What do you do to ensure that you are not, caught in the same, shall I say, whirlpool in the way it is, or tornado, which is happening today. So, Sandeep, you want to take on?
Yeah, sure. I don't
You
mind.
deal with
Anyway,
private investors and
yeah,
analysts, etc. Everybody will have a suspicious lens all the time.
absolutely. No, I think the I mean,
Because
we've
yesterday
seen.
companies are good. Next day, you hear a completely different story.
True, sir. So I think the obviously we've had many examples of such corporate fraud where institutions don't exist after this news has uh, after the fraud has been discovered. So obviously, the insistence of the incident of fraud, to my mind, it's an example that I take. It requires like a willing seller, willing buyer concept. To do a deal, you need to have a willing seller and a willing buyer. And for a fraud to happen, you need to have intent, which is malified, and very weak systems and controls in the organizations. Because either of the two, if there is no intent, if there is no malafide, there won't be fraud. And if systems are or controls are strong, they certainly will be able to prevent a fraud. So to that extent, the second part, which is very, very strong systems and controls, all largely technology enabled, uh, they can certainly be a big tool, and the CFO is a big driver of that control regime that has to remain. Because as I said, at the end of the day, when you go home, you should be able to sleep in peace. That I'm not left all the doors in the house open, anybody can come and go. The second one is about malafide intent and obviously collusion, without which fraud won't happen. There are classical ways of doing it. At the end of the day, that collusion will be within individuals. So there is no system or an inanimate object that is creating the fraud. There are people like in flesh and blood who are doing that. So obviously there are a lot of processes there. How you select a person, how you keep track of his performance. But I think one thing which I have certainly found very, very useful is to rotate people. If you let somebody do the same
Sandeep,
job.
I think let me get you focused on. My
Yeah.
blunt question is, do you think a CFO can prevent all of this which has happened, or CFO could not have prevented it in a way?
No, I think certainly.
Corporate fraud and corporate failures. Can it happen without a CFO?
I mean, I think a strong CFO certainly can help prevent it. Is it a guarantee that if you have a strong CFO, fraud will not happen? I don't think so. But is the CFO in a
large
position?
scale corporate fraud and failure?
Absolutely, he can prevent. Absolutely. No, I mean, I'm not talking about petty frauds that happen, but certainly large ones, 100, 500%, 500% he can. If he not, then he's incompetent guy. Then he doesn't deserve to do the job. Sorry.
I hope all agree on that.
Yeah. So I will, like to slightly, put in a different perspective that the failures can be one because of business reasons or macroeconomic factors, which to some extent can be influenced, if you are able to sense that better what's happening globally, what's happening in particular industry, and therefore, you diversify, reduce those stakes, etc., where again, CFO can help. The other is that which is a risk which is taken, though it may be labeled as a business risk. I know, and all of you people might be aware about one very large listed pharma company in India, which took a very, high calls in terms of foreign exchange part, and, entered into some exotic products and, ruined the entire company, right? Now that was a foreign exchange part, which I cannot say that, promoters are aware, but there was something like a greed of money, so can the CFOs, bring a wisdom to that, saying that let's do business in a business-like manner and let's not start doing something which is not a business, but which is a gambling or speculation. Okay, that is one part. The second, which is the intentional failure or a fraud part, their CFOs can put systems and controls to bring that, at the surface if it's done by some other people. But if it's done with the promoters or owners, the CFO's role is, to first at least, try and prevent that. If not possible, at least he shouldn't be part of that. That's the way, he can at least still, so is displeasure or whatever control or minimization he can do in that process. When it comes to the auditors part, you mentioned that auditors get blamed because of that. I think the auditors, if they are conniving, obviously are responsible. But even if they are negligent, they cannot be pardoned. Having said so, even the managements and many times even CFOs have been put behind the bars. So I think everybody faces the consequences of something which is not
you're
going
saying
right.
auditors should also be put behind the bars. That's what I
No, I'm not saying that. No, I'm saying that if the auditors are party to the crime, then obviously they will have to bear it. And if not a party to crime, but there is a sheer negligence on their part of bringing such things, again they will have to have some negative consequence. And obviously the management and CFOs, if they are part of that, obviously need to have more grave consequences of that.
Given all what's happening, do you think there's a future for the auditing profession, Nitin?
Yes, profession always will have a future. Maybe even more tighter controls will be required. In fact, I would suggest that currently what is the 10-year term or 2 terms. I suggest that if the institute makes it compulsory, then no auditors can work for more than 5 years in any company, even the lifetime. And every 5 years, this rotation has to be done. I think certainly it will bring some better disclosure, transparency, and governance.
There's lots of views on that. Anyway, that's a different subject. Let me move on to asking a very fundamental question. I think let me ask Ramesh Subramaniam this, and others can chip in. Is CFO position a destination? Is there something next? I know you moved beyond. So I'm asking you, therefore, always one looks at organizations, positions, careers, etc. So is the CFO the end, or?
Okay. Well, I would say that there are, at least my observation is there are broadly 2 types of CFOs. Okay. I'm just trying to make it simpler. One for whose bent of mind is very fundamentally a CFO requirement, which is about numbers and control and compliance, right? For them, that's a passion. And I think when it comes to passion, like many people in taxation, for example, they just love taxation. There are chartered accountants who have moved into taxation, and they don't want to do anything else because they just love the subject. Same with audit profession also. So if your passion is that, then I think that's a destination by itself. You just love your job and you enjoy it till the end and you retire as a CFO. Then there are people who, during the journey of becoming a CFO, understand finer points of business and value creation and a larger, driving a larger strategic agenda. And when you learn those ropes, then you tend to realize that you can add much more value if you're given a free hand as a business leader. So, that's the next step evolution. But that requires the typical CFO to step out of the comfort zones and walk into the difficult areas.
So in this sense, what you're saying, a CFO is not a destination. He can move on to become CEO and beyond.
Yes,
I
clearly.
think, is that the universal view across participants, the panelists here?
Yeah, certainly.
Yeah,
but again,
I
as
totally agree.
Subramaniam mentioned, depends on what is the goal. If people are comfortable doing only that job.
That's exactly what Ramesh said.
Yeah,
you want to do accounting and be happy as CFO, fine. But if you yourself in your role have been strategist, part of management, you become a business leader, you're a magnet for talent, all what we spoke about today, CFO is definitely not a destination. So I think we've had some very, very useful discussions, and you've really added so much to. I don't want to get into, in the interest of time, I would have asked you questions on the buzzword ESG and what your role is, and I don't want to get into that. But very quick, 2 minute, each one of you. Do you see a different 21st century CFO, a modern CFO which is different from what you are? Sandeep.
Absolutely. I think if I look at some of the talent that we are hiring, I mean, we go regularly to the campus every year and go and hire. And I look at the children that are, I mean, the kids that come on board. And if I compare myself with them, when I was their age, it's a total transformation. These people are have so much technology embedded in them. So savvy are they with technology. I think they are far better at dealing with ambiguity than people like me were. So I think 100% we will see a very, very different profile of
Modern day CFO.
of modern day CFO. And only one example, only one difference. I think when I at least passed out, and most of the folks who I did CA with, very uncomfortable looking at the external world. We were finance folks, all internal, risk averse, whatever adjectives you want to give to the finance guy was appropriate to all of us who qualified. If I look at the people who come on board today, none of those adjectives qualify.
Subra?
Yeah.
So I'll first start with the trivia that I think gone are the days when finance guys used to wear crisp white shirts and used to be now the current CFO, because even when I grew up, the CFOs were regarded as very stern. You had to knock their rooms. You had to be really poker face to be qualified as a CFO. On a serious note, if I may say, today the CFOs are much more agile, creative in a way. In fact, jokingly, we used to say CFO is not a CFO, but he's a CFNO, Chief Financial No Officer. So for the key job is to refuse the demand for any budget or to evaluate it from a cost perspective. But now it's become much more evolved, much more technologically adept person, and much more forward-looking. So it's looked as much more as a strategic advisor rather than a historical bookkeeper, number cruncher. So I think we are in the path of journey. We're the cusp of it, but probably the next 10 years, I believe, will see the CFO profession completely getting transformed.
That's why Sandeep is a way ahead. He is not wearing a white shirt, instead he's wearing a black shirt. And CFOs can change and be everything, but they shouldn't become UFOs. That is the most important thing. Otherwise, we'll have a problem. Nitin?
Yeah, it's like a chief future officer, Ramesh. I think from controller to growth partner, I think we have already traveled a lot. And now I believe that from the bricks and mortar to physical assets level, we have gone to IP assets and digital assets. And from I do all, I think we have now traveled a long mileage and say that I do only those things which others cannot do better. And from now projecting the future based on past, we are anticipating future and working back in terms of strategic response to that. I think there is a tremendous excitement in terms of the modern role.
So this is a great term you use, Chief Future Officer, not a Chief Foolish Officer. So that's a very good use. Ramesh Subramaniam, yours.
No, I think the fundamentals won't change. The fundamentals of being able to design the company systems, processes, and reporting won't change. I think that the focus on IT, digital knowledge, etc., would be of a different level. Those will be very fundamental requisites going forward. I think that's the major change. Other than that, I think with the times, I think this role will just the percentage of allocation of time on whether the strategy or the accounting and reporting, that percentage will keep changing. I don't think the content will change significantly.
I think it will soon morph into a chief performance officer from a chief financial officer. That how do you drive performance by allocating resources? That's how I think the role needs to get evolved.
Capital allocation is a big role for a CFO in any case. He helps the company decide that big time, without doubt. So I think it's been a very useful discussion. We've had very, very great insights. I don't know whether the audience participation, how it is, but there is one question only I can see in the chat box, which is about, do you think on their time nurturing talent in the function given various aspects? I think you all have spoken about CFOs taking leadership in serving as also a magnet for talent and ensuring that you also build the organization, include not just in terms of numbers and finances, but also people, in terms of hiring the right people, mentoring, providing. That too, I think, is a role of a CFO. So I think there's one more question which popped out. How does the CFO now view Gen X role, experience of hiring freshers? I think Sandeep has highlighted that. No, the question particularly is in the context of the next generation doesn't want to own a house, doesn't want to own a car, and they may not be like Nitin Parekh and not changing jobs, or like me for that matter.
Absolutely.
Isn't it?
They want new experiences, if possible, every day.
And the question always is who's interviewing whom. I'm sure you would have gone through that. You wonder whether you are being interviewed or they are you are interviewing.
Correct.
So yes, it is recognized that this next generation is a generation which is impatient, which is ambitious, which has a different set of things. Because they said, why do I need to own a vehicle when 10% of the time the vehicle is used, 90% is just parked in the parking lot or in the garage. I'm sitting in the office. If I want to go from point A to point B in a Mercedes, I'll hire a Mercedes for that. So why do I need to own a Mercedes? And same with the house, etc. Because they don't know where they will be in perpetuity, other than treating real estate as an investment. So I think they want experiences, which the questionnaire himself is pointing out, and I think there's no dispute in that. Anybody, any question? Or Vivek, can I hand it over to you?
Thanks a lot, Priya Ramesh sir. First of all, we started with a saying that 2 hours is too long for this discussion. Now we
I said that.
We could not still answer many questions. Ramesh asked me to talk about the risk management of pharma company, and I will still not be able to answer that.
No, I understand. Pharma company, not only risk management, the whole thing about strategy. Are you going to be in preventive, going to be in curative, or are you going to be in well-being, wellness, which you talked about? Again, how will you deal with injectables, biosimilars, all of that you've spoken about. In a way, yours is a very complex, extremely complex business.
Yes, sir.
So what should be the future? Now, if one looks at it in the current scenario, it's everybody should get into vaccinations. Because that's the name, yeah. But once this disappears, nobody will be left with stock of vaccines. Do you stock up remdesivir or do you don't stock up remdesivir is the question, you know?
Yes, yes.
Yeah, thanks, Priya sir. One quick question. When we see CFO of 2030, how lean will be the team of a CFO? Because as per the World Economic Forum, the future of jobs, according to bookkeeping, as Subha ma'am said, is becoming a redundant job. With bots and RPA coming in, reconciliation is no more required, and 80%, 70% time of the team goes in the reconciliation. So with the RPA or RPA and the ERP integration with the banking facility, how thin or lean will be the team of finance in future, say 2030, and what will be the role of CFO then? Because there's a very good horse story of 1980 and 1880 where horse were there, a problem of the horse was there, and then the locomotive took over. So whether there will be scarcity of jobs for CFO for the aspiring CFOs, or they have to start learning Python, how they...
In a way, Vivek, it was a question which I didn't ask. The question which I didn't ask was, there is a newsreader role, which is financial reporting, which will involve everything, which is reconciliation, blah, blah, blah. And there is a functional role of a CFO as a function where he's also enables organization's performance. Should both roles be in one, or should we have a newsreader role which directly reports to the board or audit committee, where only reports news? That is a controller. Should it be part of CFO? So essentially, if you answer that question, you will take away all the reconciliation, etc., which a CFO won't be bothered about, because that's more part of news reading. Correct?
Yeah.
I think so. No, so I think this is a very important question today. That's already happening, actually. Today, I've seen so many financial controllers actually handling the audit committee by themselves, okay, in terms of presenting the annual results. And the CFO kind of supplementing, at least I did that role, supplementing what the financial controller is trying to say in terms of explaining the accounts. And you really rely, because you can't go into so much depth because of the sheer volume of work that is involved in closing, because CFO has to focus on so many other agenda items that, every little note, etc., would be difficult to. But at the end of the day, who in the leadership team is going to represent that whole area is the big question. Every area of the business is getting represented on the top table by someone. So if you leave this important area down to the next level, it is not appropriate. I think CFO will have to take ownership. It is just that how much involvement at a personal level and how much depth he wants to go is depending on, how much he wants to.
Is there an inherent conflict?
No, I don't think so. I think the ultimate ownership shall lie with the CFO, because at the end of the day, otherwise, what is the CFO responsible for at the end of the day? The largest piece is transaction reporting, which is the fundamental to what the outside world looks at. And if he's off the radar on that, and if he's a reader and if he's only a receiver, I think that the ownership will lie somewhere else. And I don't think it's an ideal situation, at least that's what I perceive. Maybe world will move that way, but I don't think that it's a right approach.
But in any case, the preparation and finalization of accounts, in most large companies is done by shared service activities, even in-house or outsourced. So that way, CFO does not get involved in preparation finalization, but he still owns that, as the organization phase.
But I think Mr. Ramesh is pointing out to the next level, that after the shared service, it becomes information, right? That's actually useful information. So whether you are a service recipient or you are the owner of that service is the big question.
Ramesh, it boils down to where you draw the borders, because ultimately the CFO has to be a person of integrity, because he's the face for the shareholders. When you're saying that there's a conflict of financial reporting, there are conflict in various respects, and that's why it's important that you build CFO builds requisite controls, because it's not possible to do it all by oneself. And secondly, he has to be trusted. While the person is responsible for driving growth, but at the same time, he's also responsible for being the news reader. And we spoke around that there is no fun in numbers without a story. So the CFO, by virtue of the fact that he's closer to the business, is able to put the disparate facts together and create a coherent story, which at times I've seen the controller misses, because controller is only able to parrot the numbers. But unless the number and the story behind it is communicated well, then there is none of the stakeholders will be able to appreciate it. Plus, I think the fact of independence can be stretched too far, because then there is no sense to the role of a CFO as well.
Well said. Sandeep, you want to add anything, or you're fine with this?
No, I'm fine. I think most of the people had the same.
And on another end, Ramesh, the bifurcation of role, presupposes that CFO otherwise is not doing the right job.
No. It's not, that's not the point. The point is there is a temptation for the CFO to massage the numbers.
Yeah, that's what I'm
into
saying.
His story. That is the point.
Yeah. And that's what I'm saying. You start with that distrust part, no? That's CFO.
In a lighter way. Today, CEOs and probably your stakeholders will force you to do some amount of massaging of numbers, and the CFO at least can figure out how much is manageable and how much is not manageable. Which left to two-level junior, there will be no resistance. Who knows?
So we talked of various full forms of CFO. One could be Chief Falsification Officer also.
Oh, certainly not.
One more point to that.
Derogatorily, I'm not saying that you all are.
Independence of the auditors and the term of the auditors being kept at 5 years. So can it be that second level of check which we were just discussing? Can we foresee a regulator asking to be a rotation of CFOs within the company?
He's right. It's a good question. The question is too long in a particular seat can not only impair your own independence, because
that can also happen someday.
Yeah, one of the risks is what we call risks of misplaced confidence.
Correct.
Because I know this person, he can do no wrong. I trust the CEO, I trust so-and-so person, or I trust the promoter. So his point is misplaced risk of misplaced confidence. Do we need to have a rotation of CFO? It may, I concede that very progressive organizations, they rotate. Even a CFO can become head of HR. We've had like that, and CFO could become head of internal audit, or CFO could move on to CEO. So
it's not a bad idea. It's not a bad idea at all.
Pardon?
It's not a bad idea at all.
Yeah, but statutorily, when it's in a statute, you'll say it's a bad idea, I suppose.
No, I guess as most statutory, whether you like it or not, statutory things are imposed only in the larger interest. You may not like it personally, but I'm just saying
Yeah.
It is not a bad idea because ultimately saturation points do give rise to a lot of leakages.
Towards this, there's one organization, as Mr. Ramesh was saying, more progressive, maybe doing that. One organization whom I'm aware of, it's a $10 billion conglomerate, who has moved its group CFO from CFO role to business head, and business head has come as a group CFO. So that is the role swapping they have done, and in line with the thoughts of the panelists.
And why we go far in the PSU banks, this is a general culture. For every 3 years, the person changes from GM Finance to GM Credit to GM Credit Monitoring, and the CFO changes every 3 years in most of the PSU banks.
So let me throw a question back to you, Vivek. You seem to be coming up with innovative questions. If I extend it, and you are coming from a region where a chief minister served for 30 years, I suppose. My question is, if the CFO's role has to be rotated, don't you think a finance minister or prime minister's role should also be rotated?
Yeah.
Before you joined, we were saying that most of the CFOs are from Bombay, but some coming from Ahmedabad, they know the power of Ahmedabad now.
I see. So what's your next question?
Born in Calcutta. Couple of CFOs on this panel born in Calcutta and now in
Calcutta.
So Calcutta is giving the CFOs to the India.
So the rotation of finance minister happens. I think someday we'll see PR Ramesh as a finance minister of the country.
Those will be the last days of the country, so don't worry.
Vivek, sorry, but I have a personal engagement. So with your and with Mr. Ramesh's permission, I would like to log off.
So there'll be a vote of thanks.
Only 1 minute, sir. Yeah, this should be up.
So just we'll have a vote of thanks, and well, friends and panelists and moderator, we had a very thought-provoking session, panel discussion, and we are getting views from the viewers who have said that it's an interesting session, enlightening session, and all these. And we had these deliberations on the role of CFO, loyalty, whom one is loyal to, limitations of financial statements, corporate failures and frauds, whether CFO, to what extent CFO could be responsible for holding it or preventing it. So in these, I am happy to offer my vote of thanks, and I will be doing that one by one. So along these lines, we have a lot of quotable quotes from the panelists and from the moderator. I'll be briefly telling that and then extending my vote of thanks. First, our moderator, Mr. PR Ramesh, thanks a lot for taking out so much precious time of yours and sharing and moderating this session. You have really, I stand corrected when I said extracting value. Actually, you have unlocked the value, and you have said that the financial statements would be shifting from being conformative to predictive. You have also said that from hindsight, CFO to get insight and develop foresight. And you are also saying that the finance and accounting function is seeing exponential change. Thanks a lot for your moderation and for your efforts in unlocking so many valuable insights from the panelists. May I request Vivek to please offer a memento from e-memento from ACA. Here we see on the screen e-memento. Thank you, CLPR Ramesh. We will have you more and more in future sessions also. Hopefully you will get time to spare for us. Then we have CS Shubhra Gorisaria. You have really epitomizes your that you are curious, committed, and courageous. And among your quotable quotes, you say that as a CFO, you cannot be short-sighted but have a long-term vision. You also say that when things go wrong, CFO's neck is on the block. So thank you for sharing your insight. Vivek, can you please offer a memento to Madam Shubhra Gorisaria, please? Vivek, can you put it on the screen, please?
Yeah, it's there on the screen, sir.
Okay. Thank you. We have CA Nitin Parekh, and one of the very laudable quotes you said was that every 5 years, the auditor should be rotated and one auditor should serve once for a stint of 5 years in his lifetime. I think the CA fraternity will be liking that. And you also said that consistency helps and don't change jobs frequently. There's no shortcut to success, and CFO's real designation would in future be like Chief Future Officer instead of Chief Financial Officer. Thank you, CA Nitin Parekh, for your kind deliberations and sharing your thoughts and sharing your expertise. We have e-memento for you, which will be mailed to you. In fact, it has already been mailed to your registered mail ID with us. Mr. Sandeep Batra, thank you for your deliberations. You have said that CFO is just a designation. Our main role is to manage the resources. Very well said. And you also shared that only thing that I take after retirement is my reputation. So one has to be loyal to oneself so that one gets a peaceful night's sleep. We much appreciate this. And one more thing you have said, measure of CFO is a measure of company. Thank you for sharing your deliberations. And we have e-memento, which has been mailed to you. Thank you for your time. And my dear friend, Ramesh, Mr. Ramesh Subramaniam, I never made a mistake calling you. And that is very much evident from your great insights into various aspects which was deliberated during this discussion. Among your quotable quotes, you said that our education system never had those components to make you a successful CFO very much because it is evolutionary, it is growing out of experience, and it is growing out of urge to take up more roles within the system. You also said that CFO's role beyond accounting and treasury function is to strategy formation, business needs, catering to the business needs of the company, and people development. One more thing you said that sometimes not doing something is more important than doing something. Thanks a lot, Mr. Ramesh, for sharing your insight. It has really helped all of us, and we hope to have more of you in our future deliberations. Thanks to all the delegates who have been with us patiently listening, and I'm sure they've got a lot of value addition unlocked by our moderator, CFPR Ramesh. Thanks to all for being part of this wonderful session. Thank you.
Thank you, everybody. My apologies, Sandeep. It's gone a little longer.
No problem, sir.
Thank you for putting up, and thank you, fellow panelists, particularly all of you. Thank you very much.
Thank you.
Thank you.
The success of the program is in the panelists, not in the moderator or anybody.
I don't agree. I take the liberty to not agree.
We respectfully disagree.
Yeah, I think the way you handled it, Mr. Ramesh, absolutely outstanding.
Thank you, and good to see some great friends in the as participants. And Nilima, I could see you. Sorry to not have recognized you. Great, and Acae Agarwal, many others in this. Bye bye.